Hi, this is Jeffrey Cohen, President and Founder of Chicago Quantum. Here today to talk to you about the top stocks that you should buy and hold for short-term trade in the stock market. We also are going to do something fun. We're going to look at the stocks that Taylor Swift should buy, if Taylor Swift were buying stocks. And so we were thinking about that. If you just earned, $100 million, where would you put some of your money to invest? And so we're actually going to share our stock market picks with you, and we're going to talk a little bit about where the stock market is today. So today, the stock market is down. The stock market is down primarily in real estate, consumer discretionaries. People are worried about the economy. Long-term interest rates are higher. People are confident about the economy. Crude oil is higher because people are going to be driving and delivering packages in the economy. And in fact, no one's really sure what's happening, but the stock market's falling. And it's falling in a lot of places. There's some technical reasons why that's happening. You can sound smart at dinner parties if you'd like. Just tell people, I heard from Chicago Quantum that the dollar is very strong, the US dollar against other currencies. And when that happens, so companies that do business in other countries, their earnings go down. That's true. I also heard that interest rates are going up. And people who need to borrow money, not only consumers but companies, it's going to cost them more to borrow money, and there's going to be trouble there. I also heard that when people are buying houses, mortgages are above 8% now for a 30-year fixed conforming mortgage. And so that's a problem. So net, it's not so much the stock market, it's that interest rates are still going to go higher based on what the Federal Reserve Bank said. And the dollar's higher, interest rates are higher, oil's higher, everyone's worried. And so that's why. So did it really happen? If we look over the past 5 days, you can see that NDX is actually the NASDAQ 100. It's down 4.5% in 5 days. That's a pretty big move, but actually, and the S&P 500 is down 3.5%. But let me fill you in on a secret. Stocks have been up like crazy over the past year. How much will surprise you? So here's the output from our Chicago Quantum Net Score run. And we're actually going to share with you the picks, the stock picks. Our clients got this morning before market opened. You get it now. The idea is that these stock picks are going to do great if the market recovers and goes up or keeps going up, which ultimately we think it will, and you're going to do great. The S&P 500 went up 15% in the past year. Now that's a lot, right? Because you can earn 5% in the bank. The NASDAQ composite, which is the tech stocks, went up 26.5%, which is really great if you're trying to save for retirement or make some money, because 26% is beautiful. Now, if you like the small caps, the Russell 2000, you didn't really make any money. This thing went up less than 2%. So people had been putting money, and they've been going up in these large cap stocks. So we're going to talk a little bit about how the large cap stocks are the ones that have fallen the most in the past week. I'm going to show you a picture of that right now. We're going to go to FinViz. They have a heat map. I love the heat map, by the way. Look at this thing. This is today's stock market changes. You can see Microsoft's up. Oh, by the way, United Health and all the healthcare providers, which are not a growth market, by the way, they're up. But Amazon's down like 3.5% in 1 day. Growth is dead. That's how I look at that. Visa, MasterCard, PayPal are down. Residential home builders are through the floor. Tech is in the grave. So, but that's not helpful. Jeffrey, how can I act on that, right? So let's look at large cap. So if you go to FinViz and you click on maps and you click on bubbles, then you're here and you say market cap, let's do 10 billion and above. Anything less than 10 billion is pocket change in this market. We're going to look at any index. So these are all US stocks. And we're going to look for the y-axis for the change in the last week. And what you're going to see is that this line is the break even. We're going to Winsorize this. We're going to look at only changes and losses at 5%, 5 percentage points. Because I think that's fair. Otherwise, you get distracted by these outliers. And if you look, the small bubbles are up. The large bubbles are all down. More large bubbles are down than up. So more large bubbles, more large cap stocks have fallen in the past week. Now, if we take that 5%, let's say, to 10%, that was 10.2. And 10.2, you could see it much more dramatically because Amazon shows up, Nvidia shows up, Microsoft shows up, Tesla shows up, even Google shows up. A lot of big cap stocks, Meta, Berkshire Hathaway. So it's not just tech; it's a lot of industries. Your large cap stocks, Eli Lilly, which is a darling, are all down. So people have been selling large cap stocks. So what does that mean? That means the stocks that are the most liquid, the easiest to sell, are the ones people are dumping and have been dumping for the past week. So while you've been hearing about people saying, oh, market's doing great, I've been watching people have been going out the back exit. Your exit liquidity, if you're the one buying a mutual fund while big money is selling the mutual fund or the stocks underneath it. This is either NASDAQ or S&P 500. Now, should you worry about it as an individual investor? No. And this presentation isn't really for, ma and dad sitting at home with some money in a 401k. This is more for active investment managers, people that trade, people that manage money, people that want to get rich in the markets. Maybe that's you. I don't know. So even with that catastrophic fall of Amazon by almost 10%, the NASDAQ is still up 26.5% for the year. The S&P 500 is still up 15%. It was more a week ago, right? But it's up a lot. And so the model says, maybe don't worry about what's going on today or in the last day or two. Look at the past year. So a few things, right? We talked about large cap is down. We talked about how interest rates are up. And we're going to take a look at that. How do I know interest rates are up? If I look at the 30-year bond, a 10-year note, just the numbers. You probably don't memorize the numbers, but when you look at a 30-year bond, this thing used to trade at like 130, 128, 130. It's down to 116. That's a 10, 12% drop in a 30-year bond. The 10-year note at 108.50 is just on the floor, right? This thing is down like 5%. So imagine you bought a bond to get a 4% rate of return, and now you go to sell it. You want to buy a house. You want to go do something. You want to go to college, take a trip. But your bond is worth 5% less than it was 3 months ago. No one thinks about that, right? So bonds are down. The VIX is up. Now, I don't believe this VIX number, but maybe it's true. This VIX number is up 20%. It's up from like the high 13s to 16, almost 17 handles. But truthfully, it's higher, meaning people are paying more to cover their risk. So I'm going to check the chats. Anyone chatting? Anyone want to chat? Anyone want to talk? I'm not sure anybody wants to talk, but if you do, go ahead. AMA, ask me anything. Please, ask me anything. I want you to. I like to know what's going on. What are you thinking about, right? What stocks are important to you? Give me a stock. I'll talk about it. The S&P 500 at 4,400. I mean, it's down, but it's down from being up. And so it's just been bouncing. It's very choppy. The NASDAQ, same thing. The Russell, same thing. And if you look at those shapes, they look like heads and shoulders. And so the way you would trade this is if they broke through the neck, which on this one, it's here. So if they broke through 43.65 and really like broke through 3-4%, it's going to drop further. So you got a lot of heads and shoulders. Look at this one right there. Like 1,500, 14,800. We're still at 14,950. You get down to like 14,700 and you start breaking lower. Yeah, the thing drops. It's a head and shoulders. It's a head and shoulders on the S&P 500, the NASDAQ, and maybe the Russell 2000. So you might say, Jeffrey, what's a head and shoulders? I'm going to go get a book. I'm going to show it to you. You should read this book. I've read it 3 times. It makes for good nighttime reading. Technical Analysis of Stock Trends by Robert D. Edwards and John McGee. I love this book. This book's fallen apart because I read it all the time. I got bookmarks. I got 4 different bookmarks in there. But the head and shoulders is the most common technical analysis. It's the most popular, the most powerful, the most predictive. Because here's what it means. Let's just look at it here. Oh, in August, it went up. It went up to this is the Russell 2000. It went up to 2026. All right. Then it came all the way down on fairly high volume. And it hit a low of 1650. Now, it went up on slightly lighter volume. And then it came down. Then it came up again. And it didn't quite break where it went last time. It's supposed to go a little higher, like 2100. So it didn't quite make it, but that's fine. And then it drops again down to, 1700. You have to look for a closing price. It looks like about 1730. It didn't quite make the low like it's supposed to. So it's not really a head and shoulders on the Russell, but we're going to go with it as if it was. And then it kind of stagnated, and then it went up again. Oh, 2012. It's really trying, and now it's coming back down again, and it's coming back down on some fairly heavy volume. So if this thing breaks 1650, it says we tried once, we tried twice, we tried 3 times. We never made it. People give up. We look at the NASDAQ, same kind of thing right there. And so I'm done talking about the big picture. You're done listening. I know you are. This isn't that helpful. So let's get into some business here. What else was I going to show you? All right, let's just show you the stock picks. I love it, right? And so there were 10,600 stocks, 10,578 stocks that traded yesterday. 4,999 passed the first level data validation. We put in some filters to make sure that we didn't pick stuff that's weird. We're down to 3,018 stocks. Now those 3,018 stocks were compared. The variance of those 3,018 stocks, if you held them as one portfolio, is 4.04 times 10 to the negative fifth. That is an extremely low variance. The variance of the S&P 500 is 2.2 times 10 to the negative fifth, which is also a very low variance. The variance of this stock market is low. So what does that mean? That means that the market isn't going up and down a lot. It chops and makes really small movements, but it's not making big movements. And individual stocks overall are not really making big movements. It's a small movement market. So I'm going to share with you the Taylor Swift stock picks. All right. If I'm Taylor, if my name was Taylor Swift and I was a musician, here are the 10 stocks I would buy. By the way, Taylor, if you're out there, I'll give you a free run. I'll get you on the show. You're going to love it. We're going to talk stocks, bonds. We're going to talk life insurance products. We're going to talk annuities. We can even talk death benefit plans for people that just need that little extra help to get put 6 feet under. Taylor, get on the show. Call my agent. Just go to chicagoquantum.com. You got this. Taylor, if you're out there, you got this. First stock Taylor Swift's going to buy is Affirm Holdings. This is a subprime lender. They lend money at 36% interest to people that are in really bad shape. They may not even have access to credit cards. But they want to go to the Taylor Swift concert. So they do a buy now, pay later. The second thing Taylor is going to buy is she's going to buy the TNA. Now the TNA is an ETF And what that does is it does a 3 times leverage on small cap stocks. So let me tell you what this means. You see the Russell 2000 actually went up 2% in the past year. Look, inflation's 5%. These stocks should have at least gone up 5%, but they didn't. They're up 2%. So if you believe the small cap stocks are going to run, you got to get triple the action with TNA. The third is Open Door Technologies. The fourth is Cardlytics. The fifth is Digital Turbine. The sixth is Skills. These 4 stocks are all monetizing games. What, Jeff? Yeah. You know, like video games and digital content sharing and apps on your phone and apps on your PC and your Switch and using Steam. Skills is about player versus player. Digital Turbine is about one tap, downloading apps on your phone. Cardlytics is about advertising. Open Door, I'm actually not sure I remember. Now, Redfin is also like a techie kind of a thing. Context Logic, don't know what Wish does. Carvana sells used cars, makes loans to subprime borrowers, and then holds the loans on the cars. So my guess is they got a fleet of trucks they go repoing every week. So if you want Carvana, right, easy to buy, easy to repo when you don't pay your bill. God, what a crap business. I feel like I'm selling you pawn shops here, but that's what the model says is going to be the best risk return. Compass Inc., Wayfair. You guys know where you can buy stuff like furniture online, Wayfair. It's a pretty sophisticated e-commerce company. And then there's others, just to maybe throw 1 or 2 out. Unity Software is in a heated battle with its company clients, with its customers. Unity creates the 3D engine behind games. You want to build a brand new world, a 3D world, you're going to use the Unity 3D engine. And then we look at Q-Rate Retail, right? Marathon Holdings. So there's other techie kind of stuff out there, but Rackspace. So Affirm, TNA, Open, CDLX, Apps, Skills, Redfin, Wish, Carvana, Comp, Wayfair. Top 11 stocks Taylor Swift's going to buy. Now, here's the thing. Taylor, here's why you got to call me, right? Call me. Get on the speed dial. Because you shouldn't buy those 10 stocks. I lied to you. All right, everyone? The ones you should buy are these. So after running hours of optimizations of stock portfolios, there's actually 5 stocks that you should buy and hold for the next 20 days to make a killing if the market goes up. And if the market goes down, these will tend to move a little less aggressively if you held them together than if you held them separately or if you only held one. Affirm, we talked about that. Cardlytics, CDLX. CKPT is Checkpoint. HLGN, I'm not sure what they do. And Open is at Open Door Technologies. So those are the 5 stocks you really should buy and hold. Because those are the ones where you work the math together. And I'm going to show you, I hope I don't give you epilepsy here with all the movement of the screen. I'm about to get the shakes myself here. Here we go. You could buy those 5. You could add a 6th one, TNA, which is the 3 times small cap. And you're seeing here that you're at 28 ticks of alpha. You could also, if you don't like TNA, you could add Carvana. For the same 28 ticks, you can have Carvana and TNA. You could have 7 stocks. So you're buying 7 stocks, 14% of your money in each. If you're putting $100 down, you're putting $14 in each. Affirm, Cardlytics, Checkpoint, Carvana, HLGN, Open Door Technologies, and this 3X small cap ETF. 28 ticks of alpha, better than the S&P 500. And you got it made. Now, today the market's doing terrible. So today my guess is that these stocks are not doing that well. But Affirm has like gone up 400% or something crazy. And a bunch of these stocks have gone through the roof, 52-week highs. And so the model says less risk. There might be some laddering or painting the tape at the end of the day. They're making sure that it's nice and stable, so people want to invest in it. But yet, when they pump much higher. It's nice. It's a nice 20-day bet. That's what the model picks. Those are your stocks to buy today. That's our stock market analysis. You heard it from Chicago Quantum. My name is Jeffrey Cohen. Now, this is not investment advice. This is just information out of our model that we give to our clients. Our clients tend to be high net worth individuals, money managers, or funds that buy and hold investments, millionaires and billionaires. But that's not you. So I would do your homework before you make this investment. Or better yet, come to our website, take a little look, and we'll show you what we're all about. Would love to. So come to chicagoquantum.com. Here it is. Click on Advisory Services. And you can say, give me an uprun. You can go more, market info, Chicago Quantum Net Score. What is it? You can read our articles on archive. We published 3 articles explaining how the model works and technically how we run it. Now, we've made changes since then. That was in 2020, but it's only gotten better. So if you want to buy an uprun, it's $100. You get these 3 different sets of data, which is pretty cool. We'll also manage money based on the Chicago Quantum Net Score. So if you didn't want to go through the hassle of buying and selling the 7 stocks, we can do that for you. And we talk a lot about what you receive, how you get it. And currently, I'm working on a standardized report template to make it even easier for people, right? Oh, Jeff, just give me the picks. Don't give me all those details. And I'm working on that as well. And we'll email you the info. We can also drop it in a Google Drive, Slack, Microsoft Teams, or Office, whatever collaboration you want. Give me a call, drop me an email if you don't want to buy online. You can buy online. You can use credit card, PayPal, whatever. Or you can contact me if you wanted to buy, let's say, a run a day for 30 days. I'll invoice you. It's fine. You can mail a check. That's easy. So that's what we're doing. So what else did I say I was going to talk about? We talked about interest rates. We talked about the market. There's got to be something else interesting for you. So let's go back to CoiFin. And let's see what else. Now, I have not talked to you about any stocks that we have a position in. This is not Jeffrey pumping and dumping. So as of right now, I do not have a position in any of those 7 stocks that we talked about in the top portfolios. I will tell you that I sold one of them this morning before I made the video, but we're clean. We are thinking about buying a stock. So I'm going to tell you what it is. Now, this is a stock that I'm going to buy, so you shouldn't buy it until I'm done buying it. I don't have a position, but you know I'm going to be jumping in it real hard if we like it. The problem is you never know when to buy these stocks. So, Jeff, what stock would you be buying? Well, there's a couple out there that I like. They're kind of crazy companies, right? And so one of them is Digital Turbine. Now, Digital Turbine, and I talked about it, they put what looks like malware on your phone. They work with the phone providers, so it has to stay there. If you delete it, it will be put back on. If you turn it off, it'll be turned back on. And what it's used for is to put all those apps on your phone. Now, what's nice is Digital Turbine has a set of services, monetization services, app management, modernization services, so that let's say you clicked on this ad for Verizon 5G, and the ad popped up and it said, hey, install the Verizon app. And you clicked it, one click, in the background, it installs. It answers all the questions for you. All you have to do is click it once. It's called single tap. That's cool. Now, the problem with Digital Turbine is they don't really make a lot of money, if any, and they owe $400 million in debt. And most of their assets are intangible assets like goodwill. It's tough. Now, I like the business and I like the management team, but wow, this is a tough one, right? And so I might buy some. I like it. Do you know why? Because it's not just Taylor Swift that's picking some of these stocks. Digital Turbine is the number 5 stock picked by our model. So, like it or not, it's a pretty sexy stock right there, Digital Turbine. Now, Digital Turbine is expected to deliver a 31% return in the next year. Volume is low and has been low. The stock is down 47% versus the average price last year. Variance is pretty low for a stonk. No dividend yield, high beta, 3.1. So, and it's only worth like $670 million. If you like a stock that could just soar to the moon on a good day, you want Digital Turbine. We do not have a position. We're sure thinking about one. It's a nice stock. And there's others we're looking at as well. And so we also track the quantum stocks. And so I'm going to take you to a page on our website where we talk about quantum computing stocks, because a lot of people want to know, right, what's going on with the quantum stocks. In fact, it's a thing, right? And so IonQ, quantum development out of Canada. Rigetti, quantum development. A guy named Chad Rigetti out of IBM started it. D-Wave, also Canadian firm, did a lot of government work, defense work. I love these guys. We're clients of D-Wave. Arcit out of UK is more about communications and securing communications. Quantum Computing Inc. is more, I'd call them like a data analytics company that is working in the quantum space, working in the AI space. And then you have the big boys, right? You have IBM, Alibaba, Honeywell, Amazon, Alphabet, and Microsoft all have quantum programs. Any of them could hit it big, discover America, basically. It's like a big thing. And Google looks like they're the furthest ahead with the Sycamore chip. But IBM's got a lot of qubits there too. Alibaba's doing something. Honeywell spun off their quantum business with Cambridge Quantum Consulting. Amazon, with their bracket service, is more about reselling other people's quantum, although I heard rumors they got their own quantum hardware business. Microsoft puts quantum into Azure as a cloud service. But again, all of them might have something in the back room, skunk works. And so, but if you want a pure play set of quantum companies, you can put a few bucks to work. Now I'm looking at Rigetti, and Rigetti, I last bought it at 49 cents. It is trading at $1.64, so it's up 300% from where we bought it. We like it. Qubits, D-Wave. D-Wave's trading at about $1. That's a tough one. We first bought D-Wave at $9, and we bought and sold it over time. D-Wave's a tough one right now. It's hard to hold that one, if you know what I mean. Let's look at IonQ. IonQ has been a pretty high price stock for a while now. It's at $13.69. I think it traded as high as like $18 recently. So you have to believe in magic to buy IonQ, and there's others as well. So that's what's going on with individual stocks. What else? Let's talk about the news a little bit. So again, right, if you call us, we're going to help you. We're going to help you with where to manage money, where to put money. Personally, what I'm telling clients to do is to put some of their money into the U.S. Treasury Department's hands. It's risk-free. You're not going to get burned. And to be honest, for most people, just buying a couple bucks worth of savings bonds, I-Series savings bonds, is pretty good. We like that. So let's take a look at Treasury bills, 13 weeks. That's the 18th. 6 months. 17 weeks. Yeah, let's take a look at that. Yeah, so 17-week, 119-day Treasury bills. You could park your money and earn 5.5%, 5.53%. I got to tell you, 5.5% to tie your money up for a third of a year, for 4 months, sure feels like a good deal. It's a good business there. So for a lot of people, that's a great way to lock in some cash, some income, right? Because there's certain things going on right now. So they're talking about shutting the government down. They're talking about interest rates going up. You got Russia-Ukraine war. You got talk of China and Taiwan. There's a lot of nervousness out there, right? And then you got the stock market, and people are suggesting maybe that the market is too high, it's too low, it's just right. They don't know where the market's going. Nobody knows, by the way, where the stock market's going. If they did, they wouldn't be telling you. They'd be making the money themselves, right? And so I say, one thing I can see from the chart is I sure wish a year ago at 3,600 I would have bought some stocks. And I sure wish at 4,600 I would have sold some stocks. Now that's looking backwards. What you don't know is 4,400, where it is roughly now, is that the new low or is that the new high? Don't know. Nobody knows. So we help clients to maybe find an edge, right? If you've got a holistic portfolio, you're looking at a lot of different stocks, that's great. But then maybe you juice up a part of your portfolio with a Chicago Quantum net score pick, right? These things, we've been doing ad hoc readouts of the Chicago Quantum net score for years. It makes money. In the beginning, we traded on it. We made a lot of money. We liked it. I had a client make a lot of money. But there are times I don't make a lot of money on it, right? But in general, when I go through a methodical process where you're buying those stocks and you're hedging against market declines using the worst stocks, so you buy the best, you short the worst, you sell the worst. Between the two, right? If the best do better than the worst, you make good money, and that's how the model works. It's $100 a day, and it should last you about 20 days. So that's what we're doing. And again, let's review, right? If you're Taylor Swift, what are you buying? Well, what I would tell Taylor Swift is buy the 7 stocks. Don't just buy 5. Buy Affirm Holdings, AFRM. Buy Cardlytics, CDLX. Checkpoint, CKPT. Carvana, CVNA. HLGN, I should look up what that is. Open Door Technologies, Open, and TNA, which is an ETF, which is a bullish 3 times small cap. What is HLGN? Can't leave you hanging like that. Heliogen. Oh, 1 for 35 reverse stock split. Heliogen, wow, is that probably a dog with fleas? Oh, $22.6 million market cap. Yeah, this is a small cap renewable energy company. Price to book is 25%. They sell at 2 times sales. Whew. Stock is down 95%, 94% for the year. So I don't know. But the target price is $15.75, and it's trading for $3.86. So I don't know. But the model says throw it in. This is the cayenne pepper in your meat sauce. That's it. So have a great day. Hopefully you make money out there. If you liked the video, hit subscribe, hit like. You can check out the website. Maybe drop a comment. I love it. I love doing this. This is my job. We're a registered investment advisory firm out of Highland Park, Illinois. We're not always this excited, and we want to work with clients like you. You take care now. Thanks. Bye-bye.